Hello, GM, everyone. Welcome again to our DDC On-Demand, episode 19, where we discuss most of our featured projects and also top founders on the Web3 and DeFi space. Now we are having an exciting tonight because we'll be featuring another project and founder who is more focused on RWA, which is a real world asset. And what's really interesting more is they've been building on top of Monad Layer 1 blockchains. So I'm going to introduce our guest speaker, Sir Patrick Hizon. Sir, GM.
GM.
Yeah,
Hey,
thank you.
Rubes. Great to be on the
Yeah,
pod.
thank you for coming here, sir. For a short notice. Thanks for joining. Now, I would like to ask you, can you make some introduction and background on your experience and that lead you on building MU Digital?
Yeah, definitely. So I'll start off by saying I'm Filipino
Mhm.
American, so it's awesome to be here for my first Web3 podcast with the
Nice.
DDC. I really like what you guys are doing to help educate sort of everyday Filipinos for blockchain and Web3. So I'm happy to be here today to introduce Mu Digital. Myself, I am an investment banker by background, originally from New York, but been based in Singapore for the better part of the last decade. My co-founder and I first met actually over a decade ago. We were colleagues in Merrill Lynch, Singapore. For myself, I was an M&A banker, so that's a fancy way of saying I helped advise corporations who are looking to either buy or partner with other corporations or sell
Mhm.
themselves. And as a foundational part of that role, I also introduced financing products, bonds, loans that would commonly be used to either help fund those M&A deals or just as part of their everyday operations. So from a Web3 perspective, been active in the space over the last couple cycles, got in DeFi summer kind of in 2020.
Mhm.
So my co-founder and I have been tracking very closely everything that's been happening with tokenization as a broader trend. What we saw in the last cycle was a lot of experiments, sort of bringing things on chain where there wasn't really a whole lot of product market
Mhm.
fit. There were issues with sort of the quality of the underlying assets that are being on chain. So, what really became interesting to us, I would say, over the last 18 to 24 months is this trend of tokenizing just traditional capital markets products, which is basically what we grew up in our careers sort of selling more for, sort of to institutional customers, but now that's being brought on chain. So we saw this massive opportunity to bring a host
Mhm.
of investments which are not yet addressed on chain and sort of link it back to our prior
Mhm.
careers.
Yeah, that's quite interesting because, like me, I'm also been in DeFi since 2020, first DeFi summer, and I've been doing DeFi applications. But the problem is, I cannot really fully grasp about RWA. I'm not too familiar with it, and how much more with, like, for example, the traditional participants. So on the level of RWA, like for example in traditional finance, most of it is really available on the corporate level only. Normal users cannot access those
Mhm.
products and assets. So bringing in DeFi could probably open a gateway for that. So yeah, it's a good thing that you're working on this, sir. Now, now before we proceed, let's try to backtrack a bit because RWA is really a huge discussion also when it comes to DeFi because there been a lot of buzzwords coming out like just this year because like what happened with BlackRock doing some ETF with regards to asset tokenization, and they've been pivoting with that. And I think this correlates pretty much on what you're doing. So let's try to. I would like to ask, what are real world asset and how does it bringing them on chain will benefit like the traditional finance at the same time the on chain DeFi who are basically degen participants maybe.
Yeah, no, definitely. So I think at the most fundamental level, real world assets are just digital representations of any asset that lives off
Mhm.
chain. And it can be a host of things. So financial assets, stocks, bonds, loans, it could be real estate, it could be commodities, like gold. People are tokenizing all sorts of stuff
Mhm.
nowadays. Art, shoes, healthcare claims. As sort of the technology is picking up, a lot of people are trying different angles, and I think there's really two ways where this happens. We are at the stage where right now what we're really talking about is tokenization. So taking something that lives in the like off chain, which people are calling the real world, and bringing them on blockchain for distribution. There is another parallel sort of shift that's happening where assets are just natively being issued on chain. So digital assets. So you see a lot of that sort of innovation happening, particularly here in APAC at the government level, at the financial institution level. Blockchain just natively creates a much more efficient and cheaper system, as you noted, to sort of create more access where there may have been barriers based on the way that the legacy system was set up.
Yeah, that's really amazing because majority of the main products now currently really emphasizing real yield assets. So I think RWA has a big factor coming in for that. Now, like for example, as you've been observing for quite some time since you've been engaging with DeFi for 2020, can you somehow give some current state of how RWA are being implemented on chain and how far we have progressed since it's being on the adoption and development process?
Yeah, no, and so this is really interesting because I think, to your point, even though tokenization has been around for multiple cycles, in terms of where we're actually at in adoption, to use a baseball analogy, I don't even think we're at the bottom of the first inning. We are so early in terms of where tokenization is. So to put that in perspective, numbers, if we look at the RWA industry as a whole, it's 5 billion TVL. If you compare that to the DeFi system, right now the number is about 100 billion in TVL. So there's a 20 times gap. In 2022, sort of the height of DeFi before, DeFi was like 200 billion. So you see this massive, RWA is basically nowhere in terms of scale within the DeFi ecosystem itself. If you look at what's actually being tokenized at scale, the first real RWA was stablecoins. And I think everyone today agrees that stablecoins has really reached product market fit. One of the, the best innovations that's come on chain. So in order of magnitude, stable coins today are over 200 billion. People don't really categorize that in RWA just because it's sort of like a cash asset. It's really used for cross-border payments, remittances, so other basically cash-like features. RWA tend to be things which people want yield. They want yield off of it. And the first paradigm which came on chain was US Treasuries. Today, U.S. Treasuries is a little bit north of 3 billion in terms of TVL. There's a number of different providers. Some are based here in Asia, some, based in the U.S. But really, if you compare that to the off-chain money supply or just off-chain treasuries, it's less than 1% of what exists in the market. So those are sort of what's the biggest today in terms of RWA. Basically, we're at the very, very early stages. Now, to give some context why I think why that's the case. Even though the technology has been around, when you're talking about tokenizing things, you are tokenizing securities, which is a little bit different from the conversation around a lot of DeFi assets, because in DeFi, there are still a lot of legal arguments around, are these things securities or not? In RWA, they are. It's clear. You're tokenizing things which are registered, distributed, through financial institutions or selling to institutional KYC clients. So the challenge then becomes, who do you distribute these to, and how can you distribute these in a compliant way? That's different from the off-chain world. Asia has always been a little bit more advanced in terms of setting regulatory guide rails. So, I'm based here in Singapore. We're lucky; it's a very friendly environment for digital assets. They want to be seen as a leader. Hong Kong is the same. Even if you look in the Philippines, the Philippines government is very progressive in terms of trying to explore blockchain technologies. It's not the same in the US, which I think people are probably quite clear until recently, very recently, with the new administration. It was sort of a regulate by issuing Wells notices and just slapping any large protocol with subpoenas and giving them legal problems. So that's starting to change, which I think is important because the U.S. still remains a large money center. But I think for us in APAC, it's been helpful that it's been a little bit more clear guardrails to build these technologies for a number of years now.
So you're basically pivoting on APAC when you try to launch this project. So in what sense, why APAC to start with?
Yeah. So I think there's two angles to it. One is, I guess, for my co-founder and I, where could we really bring value to the Web3 and to the DeFi system? We both sort of built our formative years based here in APAC, and what we were doing throughout our careers was originating deals all across Asia Pacific. So we're both based in Singapore, so Southeast Asia was kind of a hub, but even into North Asia, South Asia, India, all the way down to Australia. That's where we built our corporate relationships. That's sort of where we built our networks. And one of the hardest parts about bringing these things on chain is at some point you have to convince the asset issuers or the financial institutions that they should put these things on chain. So having these embedded relationships is important. The other angle of it from the demand side is really the way that we approached, building our product was everyone in DeFi is looking for yield.
Mm-hmm.
So very simplistically, where do you find the most attractive yields on a global basis? And I think what a lot of people that don't spend a lot of this time in this region actually probably don't appreciate is from a risk return adjusted perspective. I mean, APAC is one of the most attractive geographies in the world in terms of the returns you can get for similar type assets, for the risk return profile you get. It's just, we say they're basically, treasures that are hidden in plain sight because basically the market at large just doesn't know these things exist. So that's the other angle of what we're trying to do. We're trying to bring what we say the best investments or the highest yielding things, to market, irrespective of where it's come. But we do think that it comes from this market in APAC.
Yeah, that's amazing. So basically trying to propel some of the best traditional assets that you can bring in on chain that could probably benefit some of the participants. Now, I was just curious because I was able to read one of your blog on your site. I was curious that you mentioned about trilemma because there's been a fundamental concept also in blockchain. We have a trilemma, and that's the main problem that arises with common blockchain. They've been having issues on how to implement as one those trilemma. Now, with regards to RWA, you mentioned about trilemma about between liquidity, return, and stability. Uh,
Yep.
are you very optimistic that the blockchain innovation could probably give a big factor on solving this?
Yes. So this is a concept. So we sort of coined this RWA trilemma concept in one of our blog posts because really what we were looking at was for DeFi users, what is important to them? And consistently what we heard, whether you're talking to large institutional funds or whether you're talking to retail users, is three things. Of course, returns, but the assets also have to be stable and they have to be highly liquid. And highly liquid, we mean that, if you're swapping your stable coins in and out of these assets, that you can do it very quickly. As we looked across different asset types that you could potentially tokenize, it does become a question of just because you can tokenize it, does it mean you should? Does it actually serve a purpose, for DeFi and for Web3 users? And our theory was in order to actually hit product market fit, you have to be right in the middle of that triangle that really solves all three sides of that equation. And it's difficult. And it's difficult because not a lot of assets do that. So just to use a couple examples, US Treasuries, has come on chain. US Treasuries are highly liquid. They're highly stable. They don't offer high returns. When they first came out, it was 5.5%, which maybe was attractive 2 years ago when DeFi alternatives sort of were not offering more attractive yields. But that's not the case at all. And US Treasuries are expected to be probably close to 3% by next year. And that's just not attractive given the current DeFi environment where, you aren't thinking neutral and all sorts of other things. So, that's one example. To use another example, more probably closer to what we're doing in sort of lending protocols, what had happened historically in other types of protocols is they were offering very high yields. But this really had two problems. One was the assets just weren't stable. So the things that were being brought on chain would default. And of course, if you're a lending protocol and the asset defaults, then you somewhat lose, you lose trust in the, in the protocol itself, but then you're probably losing a lot of value on your assets. But then a lot of times too, a lot of assets that are being brought on chain, they just aren't liquid. So you might be locked up for 1 month, 3 months, up to 6 months, depending on what assets you're bringing. So that's why we like where we play. We play in Asia, not just Asia Pacific, but particularly in credit products. And by credit, what we mean by that is, public bonds, all the way down to private credit, which is a range of different type of, I guess, financial assets, which are all, based on, APAC lenders. But the criteria of the product we're bringing is that it does hit all three of those metrics.
Yeah, this is a good, I think, options for every participants in the space, where most of, like, for example, DeFi are really correlated about different assets, which basically high valuation, price, volatility. So somehow some participants need stability and the process that they could somehow park their asset or regulated in that sense, because RWA by default is regulated. And at the same time, a constant stable yield, which is less volatility at the same time for security purpose. That's a good thing that MU Digital is considering that. Now, let's try to dig deep about some of the details about MU Digital, what you are doing. So tell us about MU Digital. What are you building and its unique approach compared to some other RWA focused projects in the ecosystems?
Yeah, definitely. So Mu Digital, we say that we are bringing Asia's best yields on chain. What we mean by that is the assets that we are tokenizing in our product are credit products. So that's the range of public to private credits. The type of investments that are actually sitting within our underlying portfolios are a range. So that's sort of the most safest, most liquid side. Those tend to be things like government bonds, so Republic of Philippines bonds, or the Singapore or Hong Kong sovereign bonds. Those can get you more conservative yields. So we say it's a spread over U.S. Treasuries, so it's usually like a 1% to 2% spread above U.S. Treasuries. Then you have corporate, so your large, a range of investment grade to high yield, bonds and corporates. These are very large institutions. In the Philippines context, we're talking about your Ayalas, your PLDTs, your San Miguel's. Those sort of bonds can get you, depending on the market, but it can get you like a 7 to 9% yield. And then what we think is the most interesting is private credit. So private credit is sort of an asset class that's really been picking up even in TradFi world over the past year or two, because these are very attractive investments. So they tend to be bilateral deals between either a broker dealer, an investment bank, or a credit fund with one company that offer yields up to 15%, sometimes even up to 20%. But sort of these are really hard deals to come by and to find because they're originated one-to-one, by different originators. And what we say is because of the fact that we have inroads and sort of a broad network to access these sorts of deals, we want to bring them straight to the on-chain economy. So with our angle, we do think that we're playing in a niche that no one else is attacking today at scale. Asia, credit. And we also think that sort of we have the ability to continue to find these deals, just given it's sort of what our careers were before we came to Web3.
Yeah, that's good. I know MU Digital is still on. You're still building, right, on testnet, right? Now,
Yep.
can
Yeah, that's
you
right.
give some, like, for example, like an overview how a particular user participate on MU Digital once you get live, so that we can somehow see how we picture out users
Yep.
can participate.
Yeah, definitely. So the way that our protocol will look, it's probably something similar to a centrifuge or like a goldfinch from past iterations, just with different assets. So basically, it's a pool concept. So for any holder of stable coins, you swap your stable coins into our product. Now, our product is probably going to be an array of different pools, depending on your risk return appetite and sort of what liquidity lockups that you're comfortable with. But let's just say that these products that we'll be launching on the most conservative side would get you like a 7 to 9% return. If you really want to go a little bit more risky, something closer to that 15 to 20%. So we basically will be In the back, what we're doing is we are finding supply of all these different types of credit products. We're constructing them into pools, which are effectively, like on-chain funds, and then giving users access to a certain risk return profile or yield that they're attracted to.
So basically, the process will start from stablecoin. So they need to on-ramp stablecoin so that they can participate on the asset. And there are different levels of product based on their risk appetite in the sense like that. Mm.
Yep, that's exactly right.
Nice.
Yes.
Now, like you mentioned some of your products that you're launching. Now, one of the major, I guess most of the challenges of some founders and teams, there are really tons of blockchain already live
Yeah.
on our industry,
Yeah.
and the hardest part is to select which one we're going to run. What network you're going to select, and we're very excited because um, MU Digital is pivoting to Monad, and Monad has been somehow a buzzword, which is a high throughput layer one blockchain that will probably scale EVM smart contract developments, and of course the ecosystem itself. So why Monad?
Yeah, no, and to give some context, we couldn't agree more that this decision it's a very difficult decision facing founders today, and the reason why that is, particularly for a DeFi protocol like us, it's based on TVL, and the reality is TVL lives across all sort of different blockchains, and most chains when you're early will say you kind of have to pick one. So whereas we're friendly and we know all your other L1s, whether they're emerging or large today, your EVM L2s, we talk to all those guys, we're friendly with them. But so from a Monad perspective, I think really the criteria comes down to three factors. It's one is just technology, right? So it's Web3 and it's blockchain. So there has to be something that's superior about the delivery of the technology that advances it among what you could get in other routes. So for us, it's off chain. Monad really impressed with sort of the vision of the three co-founders there. They have impressive backgrounds, not just like academic, but came from high frequency trading desks, and basically what they're trying to do is construct a parallel EVM system from scratch. So they're not forking anything; they're building it from scratch. The way you can think of it is EVM sort of like a one lane highway, and that's the way that transactions are processed. They're building like a 10 road highway, or 10 lane highway to basically fast throughput, and that's sort of what they sell: high latency, fast throughput. So we believe, and fundamentally we believe in technology, and for a protocol like ours, where if we want to start composing into a lot of different DeFi protocols and potentially a lot of transactions happening, low gas costs, high throughput is important for our protocol. The second is the ecosystem. So because of the fact we are a DeFi protocol, you have to go where there are other, not just projects, like in the sense of there are lending protocols and AMMs and perpdexes, but like founders and projects that you actually want to partner with, because that's very important. At the end of the day, we're doing business, and you're sort of selecting who you want to interact with. We were lucky in the sense that we participated in Monad Madness in Bangkok. This was in November of last year, so we had the opportunity to interact with a lot of the builders and founders, sort of in that ecosystem. And from what we can say, super high quality, whether they are Monad native, whether they are sort of your larger names who live across chain but are coming to Monad, as well on day one. We have exposure to all of those, so I think that was a check for us. But probably most importantly, and I think you guys would appreciate this at DDC, is community. This is Web3, and in Web3, sort of installing yourselves in community and building your own community is paramount to success. I would go as far to say that for a lot of RWA protocols that are just purely looking at tokenization as sort of a technology, but miss the community part, they're missing the whole boat of coming to Web3. We are built for DeFi. We're built for building communities, and so there's a lot of different things we are doing to sort of build our own. But we thought that aligning ourselves with Monad really helped jumpstart that in the beginning.
Yeah, I pretty agree. Community is really essential on building your product market fit. At the same time, of course, the feedback of the community makes your product more really efficient and as it progress. And I think by default, community serve as your marketing also, indirectly learning a
Yeah.
lot from them, at the same time spreading awareness to everyone. Now you mentioned about community, so I want to ask about your alignment on building the community. Are you trying to follow the similar approach most of the DeFi products, like creating a DAO, governance, and of course, when you say decentralization, it's basically tied up to possibly in the future token. What do
Yeah.
you
Yeah.
thoughts on that?
Yeah, sure. So we think of community at a few levels. So I think very fundamentally to us, yeah, as you mentioned, community is synonymous with your early adopters and your users. So really, the people that you can build around in the beginning, and that's definitely where we are. It becomes sort of this organic. I don't know which analogy to phrase you, but you're basically building like your own
Mhm,
army,
yeah.
right? Of people that really are aligned to your cause, really like what you're building, and then therefore it sort of just it grows organically. Um, so for us, we've done a few things. So we'll start with from a funding perspective. So we actually did raise a community round via Echo, and via Echo there were two different sort of community pools we tapped. One was the Monad community. So the syndicate's called Purple. So as part of that, there were a large number of Monad community members, which directly came in monetarily. Also, the other one was called Four Ventures. It was from one of our early backers, CMS. But for us, we thought that there was a nice way to just align incentives from day one. If if you are building something for the community, and they have sort of financial alignment from day one, we thought it was an interesting tool. Echo's kind of a new paradigm, but we did a round to sort of complement our VC round. The second is just sort of bootstrapping growth, and from a community perspective. So we can say that as we have sort of scaled our early community, and a lot of that's living on Discord today, we are actually taking on members of
Mhm.
the team from the community. So just last week we did announce two mods that came directly from the community. We
Nice.
saw them as super
Mhm.
engaged in X, super engaged in our Discords, and now they're
Fun.
they're actually part
Mhm.
of the team. We're doing a similar thing. We have, sort of this ambassador program too, which is because we didn't want to limit it just to, just a couple people. So we're trying to find ways, to your point, to engage early users, people that are really curious and excited about the protocol, and to just grow with them, and take their feedback from a UI perspective, from product perspective, and marketing. It's actually quite fun. I've been engaging with our community. To your immediate question on governance, and tokens. So we do envision launching a token once we're public, and all that's subject to markets, and what makes sense in sort of timing. But part of what we have always thought about for the token is what utility does this token have. And for us, it's interesting as an RWA protocol and sort of a pool protocol, like how exactly do you overlay governance on our product. So one of the things we thought about was for significant sort of token holders, you can actually have a say in either the type of things that we originate. So for example, you could say, in Davao, like, go find some like pineapple deals with Del
Yeah.
Monte or something. I'm just like examples, but like
Uh-huh.
we presumably
Yep.
could do
Yep.
it.
Mhm.
That's us. We presumably could do it. So it's like, what investments do you want to see? What sort of
Yep.
things are meaningful to the community, whether it's yield or whether it's just things that you care about the cause. Um, so that's one interesting way. But then also, as we develop over time, our pool structure will evolve um, ultimately to the needs of our customers. So I think the token may be an interesting way to sort of link what we're bringing on chain, either the portfolio construction or sort of the asset management within. We've to play around with these things. We've thought about a lot of different ideas for how to involve the token with
Yeah,
governance.
I think you're pretty aligned because you started a product which is basically really an organic yield product, which is an RWA. Then eventually could transition to governance, which somehow getting feedback from the community on what products you're going to implement, eventually progressively to make your your ecosystem furthermore increase in the sense. Now, yeah, it's really an amazing. Now, as we know, Monad, there have been buzz that it's coming to testnet. So, how did
Mm.
MU Digital align itself with regards to Monad coming to testnet? Do you have your own testnet also coming in?
Yeah. So, yes. So there is a lot of buzz right now about Monad's testnet. The current what's out there in the public is it's
Mhm.
February, which is basically next 2 weeks. So Monad testnet. You can assume that we will be live on day one when Monad goes live, and it's a really exciting time, I think, for all of the builders that have sort of um, aligned ourselves as Monad native. And what I can say without like giving away too much is there is a lot of collaboration that's happening across a lot of different teams in the Monad ecosystem. The whole point of sort of Monad having this push to build their own organic community over 2 years and have an ecosystem, a builder community, is that there's a lot of interesting stuff to do once Monad goes live. So we will be we'll be a part of it. Actually, we dropped the teaser last week in terms of what we are
Mhm.
launching. Um, our specific campaign, it's an Easter egg hunt. Um, I can say that it was inspired by one of my favorite books and now a movie called Ready Player
Oh,
One.
nice.
Um, and yeah, the intention is to make people hunt across the Mu Digital / Monad universe to achieve different things. So that's what I'll say about it. But we're super excited about it. We dropped the trailer just at the end of last week, and you can assume once Monad's live, we'll be live.
Yeah, definitely. Actually I saw that post, and eventually I will be cascading that to my community. Definitely exciting to participate on MU Digital Testnet along with, of course, Monad. Now, before I'll go to switch to another question, I want to. I almost forgot that. What is basically most of the target audience for MU Digital? Are you covering the basic DeFi users, even institutionals? Are you covering this, or yep? How do you? Mm.
Yeah. So basically, our target audience is anyone that's searching for yield on chain. So if you're holding liquidity or you're holding wealth in stablecoins, we would hope that we're an attractive alternative for you to think to park your stablecoins. We're built, equally for large institutional sort of your liquid funds, which may be deploying very large checks into our protocol. We're equally, built for your retail user. That's, if you're looking for something to safely safely earn yield, but also similarly play around in DeFi, because we will be composing with a lot of other protocols where you can use the Mu Digital. We call it a Mu bond, but basically you're using the Mu bond as a base collateral, and then you can go, if you want to speculate on the yield on something like a Pendle,
Mhm.
or you want to use it for collateral in a perp dex. We're finding a lot of ways to work across the ecosystem, and so that's why we do say we're different folks for different strokes for different folks. Some people just want stable yield and don't want to look at it. Other people want to play around with yield. So our product is meant to serve both ends of the spectrum.
Yeah, that's really amazing because there's really a lot of composability that could come out from your product once it's live. And DeFi is really a vast application product that you could create more yields on top of your yields like that in that scenario.
Yes.
Now,
Yes.
before we proceed, I would like to announce to our viewers that MU Digital will be giving giveaway a domain, an all domain, which is basically an ENS, I think, building on Monad also. So you can basically secure your first Monad domain name that you can somehow map to your current address when they come on live. So yeah, just like, share, and also comment on our when we're live at Twitter, and also in Facebook at the same time at YouTube. Now, yep, this would be the last question because there's been a pressing discussions about RWA, if really RWA is a really a formidable product that should be built on DeFi, or it's just basically a hype or a speculation. So if real world assets are really meant to bridge on traditional finance, like traditional finance with DeFi, do you think we're actually decentralizing the finance, or we just rebranding an old system on chain, or we just draw? How do we draw line between innovation and just wrapping, like for example, an existing legacy finance?
Yeah, no, it's a fantastic question, and it actually gets to why my co-founder and I founded Mu Digital. What we saw was a lot of the applications that were being used for tokenization were wrapped TradFi.
Mm.
And maybe it was, around the margins, things were a little bit cheaper, transactions, happen a little bit faster. But basically what I mean was there were a lot of experiments that happened both at the government and the financial institution level where private blockchains are being created. And I can understand why that's the case. Any company, any enterprise wants to make their operations more efficient, and blockchain is a technology that can do that. But that's to us, if you are not unlocking the superpowers of blockchain, then you are not building for Web3 from our perspective. And that's why we say we're DeFi first. Unless you are unlocking, 24/7 liquidity, unless you're locking access by breaking down, existing access barriers in traditional infrastructure, unless you're composing, with other projects, as we talked about, you're not really building for DeFi. So I think what you will see as RWA continues to grow as a category is all different types of flavors of RWA protocols. Some of them, maybe what they want is sort of just to incrementally tinker with the legacy system, and that's okay. I mean, there's reasons why that works for them, but we're at the opposite end of the spectrum. We are here to innovate. We're here to use blockchain to further the existing system, and we hope that the product that we're bringing to market helps achieve that.
Like having like a good value prop product eventually on chain, like particularly in DeFi. Is this a possibility that you're contributing to onboard institutions and even government in the future, maybe, right?
No, absolutely. The way that I look at it, and we look at it in Mu Digital, is Web3 as a market. I mean, we're still outsiders. Web3 is, it's the general public it's starting to get there in terms of, now there's ETFs and people are starting to ask about Bitcoin in my portfolio and things like that. But unless, the protocol is really furthering the onboarding of the masses, then we're not doing something right. So we do think that RWA is, 2025 is set up to be a fantastic year for RWA, and we're excited, to be here building, given all of the tailwinds that are now present with the new U.S. administration. We do think things are going to move fast in terms of at least policies being rolled out. If you're talking about financial institutions, I mean, my co-founder and I grew up in those, and they move prohibitively slow, and there's a lot of red tape and a lot of committees to get through to get things done. So I think some will move faster than others. That's certainly true, but I think what you will see is this longer adoption curve and this sort of longer grind where you're seeing a lot of new things come on chain. But to your point, the question is, are you bringing new people on chain or not? And we hope that we're bringing new users on chain, whether it's institutional capital or whether it's retail.
Yeah, definitely. We're really optimistic on that, since Trump releases his meme coin, Trump. So that could be a start. That could be a good start eventually for more mature products like RWA to get onboarded on chain. Now we are on the
Yes.
last part. I would like to ask, what are some of the roadmaps and, like for example, we can expect for NMU Digital building on Monad, that we could be excited in the coming months and years.
Yeah, definitely. So I think in the short term, definitely testnet. So it's coming this month. So please check out our socials, and we'll try to be fairly public about sort of what's out there. But I think it's a really fun campaign that we're launching. It'll be over a few weeks, and really the intent of it is to introduce sort of our product as part of Monad's testnet, to introduce people to other protocols, which we will be composing with, sort of in the Monad ecosystem. In terms of our public launch, which is really at the end of the day, the TVL generation, and when people want to start putting money into our protocol, public launch is probably closer to the end of Q2, maybe early Q3. Sort of just depending on what milestones look like. Our intent is we are building on Monad, so our intent is to sort of align our launch, with the ecosystem and with the chain. But I think for the longer term, our goal is bringing Asia's best deals on chain. So that really means that we hope that we're continuing to find new things and just bringing assets to on-chain users, but just really just in general, which your everyday user doesn't have access to. But now we're getting you access to this stuff, and so it's incumbent on us to keep originating interesting new products, building products that is interesting to the community, whether they're specific yields, specific geographies, whatever that is. So yeah, we've got a full year ahead of us. We're excited, for the immediate stuff, and it's good to be building in RWA.
Yeah, exciting times, definitely. Since you're pivoting in APAC, basically Asia, that would probably really cover Philippines also. Some of our innovative products here that you could get onboarded on your project. And the good thing with that, I think you're familiar with. There's already a community, a very vibrant community, what called Filipinads. Yeah, already existing. Our monads native also trying to spread awareness about monad blockchains. Yep, thank you so
Yeah.
much, Sir Patrick Hizon, for your time joining us on DDC On Demand, sharing your thoughts about RWA, another DeFi product that could be very an options for us to participate eventually and correlate on an aspect of getting a real yield aspect and at the same time building community in that sense. So, yep, thank you so much for joining us. And we hope to follow through with MU Digital and, of course, anticipate your testnet and mainnet soon. Yeah.
Thanks a lot. No, it was awesome to be here, Rubes. Thanks for having me on, and thank you to everyone at the DDC community. It was fun
Thank
to
you
be
so
on.
much.
Salamat.
And also to our participants and viewers, please share, like, and comment. We'll be selecting winners for the domain name for the all domain name for Monad. Thank you and good evening, everyone. Bye for now.